Hey guys, this is Simon with Trade and Perform Coaching doing the trade review for, let's see, today's Wednesday, the 20th of August. Okay, so quickly, let's kind of jump into it, and here's the ES chart for today. So the game plan was very simple. We've simply been getting no counter rotations, and that's been causing me quite the issue with, hold on one second here, quite the issue with forcing shorts. I hate when this does this, so let's see if we can just clean this up and start over again. No. And because of that, coming into the day, I simply said that I wasn't going to be looking to take in any trades in the first hour, and certainly no counter trades to the short side. What's the reason for that? Well, the short side has simply not been working, right? Did I have good trade location or good potential trade location? This is, by the way, was not originally on the chart in the morning. This is where I kind of said we needed to break below in order to trap. Okay, this was the zone originally, and I simply said that unless we got an extension up into this area to begin with, I was not interested in taking shorts. But there was another step in that process, and that is I wanted to see NQ have some kind of rotation. Why is that? Okay, so I'm a volatility trader. I need the market to move. I need the market to move on both sides of the coin. To give you an example of what that might look like, I can pull up my CL chart for today, actually, which would be this one here. And what you will see here, I'll pull this over. So this is my CL chart. And what you can see here, and CL is the crude oil contract, not encouraging anyone to trade the crude oil contract. However, what you get and what you see here is this is the 8 a.m. pit open. And from 8 a.m. pit open, you can see we had nice rotations up. We had big rotations back down, followed by big rotations back up, nice rotations back down, and then finally rotations into the close to a new high. And then obviously it's rolling over to the downside here this evening as I'm making this recording. The point of that is this is a two-way market. I can actually trade both sides of this market without any difficulty, or most of the time without any difficulty whatsoever. Meaning I can take my shorts and move them to the downside. I can take my longs and move them to the upside. Now contrast that with what we have in ES, okay, which is a complete lack of counter rotation, right? So it's interesting. I got into a Twitter conversation. What does ES look like when we have good two-sided trade? Well, it looks like what we had on Friday. Now, I'm going to pull up a chart here because there's one very particular characteristic of the market right now that's really driving it and driving a lot of my trading decisions. And that is, let's see if I can pull up the chart quickly. Okay. If we crunch this down here real quick, guys. Okay. What each of these dips have in common to the downside is a news-driven event. Again, a news-driven event, right? Other than that, for really the past 1, 2, 3, 4, 5, 6 days, it's just been a straight grind up. Additionally, right, and this is important, this down day was caused by what apparently now is a false report of some kind of attack in the Ukraine against Russia, right? Without that, this day most likely simply looks like this, right? So what this is telling me is, hey, there's no reason for me to anticipate the break. Not only that, right? And so in planning my trading, okay, trading is not entertainment. Trading is a business, okay? So look what happens over here now. I want to show you something here really quickly. Look through this period of time here. Look, shorts were very, very difficult through this entire period of time, guys. Yes, did it go down? You bet, but it rebounded up a lot, almost every day, right? Even if we got downside moves, very quickly, Those were eliminated. It was very hard to make downside moves stick. Through all of this, we had no range, right? We were grinding sideways instead of up in this, but we still had no range, right? And then all of a sudden, we had this gap down, and over a couple of days, this range started to increase. This was our clue that better things were coming. Wasn't quite there yet. And still, I would argue, with the exception of one day, the upside trade for the majority of the day, outside of the first hour, was easier than the downside trade. Okay, every one of these days had a pretty nice rebound to them. Again, with the exception of this one, which closed on the low of the day. Now, my last piece that I have on this is, notice that we then exploded to the downside. But on all these moves that were to the downside, the majority of these had pretty vicious reversals, even from the lows back up, right? The long has consistently been easier through all of this, right? And then all of a sudden, the shorts have almost completely dried up through here. It's almost been all drive higher. That's why on Friday I was pounding the table. Don't short. Don't short. Get long if you can, right, for push higher. And those push higher have been very nicely rewarded. So my handicap in this environment is simply that I will not chase up. In other words, I need a rotation down. My discipline calls that I get a rotation down like this, well, not even like this in order to get this push back up, okay? So I've tried to address that. Actually, I have addressed that by every day putting out a chart. And what this chart shows, let's see if I can find this here. Isn't this here? No, that's nothing. Let's try to go plan B here. Nope. There we go. These are areas that are traded away from the market. These are the locations I'm looking for from the upside to press shorts, right? And these are areas from the downside that I'm looking to press longs, okay? This blue area is simply poorly auctioned area. I don't want to take a trade in here. But outside of that, here and here, at least for yesterday or today's trading session, right? That's what I was interested in locating the trade. Now you got to realize from a psychological perspective, there may be zones here, there may be a zone here, and there may be a zone here. But if I'm interested in getting a slingshot out of this area back up or slingshot down, right, I'm going to be patient and wait till I can get up into these areas to get this move back down. The zones in between here might work just fine, right? They might or might not. But certainly right now, if I'm going to short, I want to stretch up into an area where I know buyers are already exhausted. Conversely, if I am getting a push down here, I want areas where sellers are getting exhausted and I can push up. I publish this every morning and post it in the live market preview, right? And certainly helps with changing your mental psychology, right, of trying to make all your money in these tight little ranges when you can simply wait for the market to get exhausted, right, on the ends and leave trailers. Still take your 2-point targets, right, initially, but then leave your trailers for bigger pushes back the other way. So I hope that made sense. It certainly does to me. It makes life much easier. So with that in mind, right, when I came into the day, the first thing I said is I'm simply not shorting. I'm not shorting this market that keeps driving up every single morning, and importantly, not giving me any rotations. I wouldn't mind the up if I could get a slingshot down, but the volatility has collapsed this week. It's August, right? And the only way that I was able to get a drive down was to get news off the Fed. And if you were trading in front of the Fed, relying on them to push the market down, good luck to you. Furthermore, this played right into the hand, right? This is the first time back down into the zone, right? And I took my trade right back here at 78 3/4 and 79. I actually goofed my stop once I reviewed my trade. My stop actually should have been 75 3/4. I put it at 76 and got very lucky. I survived that stop by one tick, and then got a beautiful push up right into resistance, right? And you'll notice, look how the market fell shy coming into it, And if you'll just wait, most of the time the market will give you that rotation right into the zone and then give you that push right down. Okay, so I did not take the short. I wasn't interested in shorts this afternoon. I'm not interested in shorts in general in this market right now when I come in. Same situation with NQ. I'll go over that really quickly. NQ this morning we came in. It's interesting because TF is actually showing some weakness and has been dragging its feet all week long. I'm not exactly sure what that means just yet, but I do know this. NQ has been easier to the upside consistently for weeks now than it has to the downside, and I will probably be pressing my downside trade on NQ less and less and looking for more and more rotations down to push back to the upside. And let me show you the reason for that. And I've been hammering the table on this from a volume profile perspective repeatedly. Let's get rid of all of this here. Okay. First of all, yes, the number one thing, this market is extended. There's no question about it. There's plenty of room for a pullback. And we have multiple open gaps sitting below that would be great areas to launch counter trades from. Here, 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 and here. All those are open gaps. It would be great if we filled all of them. I would probably take a shot at each and every one of those locations, meaning that 4013 will be my first location to try to take a trade back to the upside, followed by 3883, and then if we get down here, down in this location. But it's important to note, this is not a crazy extension, right? You got to get a sense of balance, right? Is this an insane move or is this a normal move? Let's go back in history and take a look real quick. First of all, essentially it moves from 3850 to 4050, 100 points. So when we go back and look as to is that unsustainable or is that a crazy move, right? So if we look at this move here, which is pretty much straight up before it got exhausted, right? This moved essentially from 3550 all the way up to 3800 and really then extended up to 3850. This is a 300, right? I want to be clear. This is almost a 300-point move. It is a 300-point move. There's no, I'll say correct, it's not almost. If you go from the base here up, this is a 300-point move up. There's nothing that says that we can't get another 300-point move up in the market. I'm not saying we will. What I'm saying is there's nothing that says we can't. Additionally, if you look from a technical standpoint, right, we had a breakout here, okay, right where this open gap is, and it'd be very common to break out, come back, fill that gap, and then push back out and push higher, okay? There's no technical damage, and there's no reason to suspect we'll even travel to the other end of the range unless we close below 39.83. That's what has to happen, in my view, in order to get a push down, and that's just a push down to the other end of this range, right? Before we're really bearish, we actually had to get up underneath this area right here, this 3850, get up underneath it, then fail to be able to get back above and push back down. That's a lot of work this market has to do to get back down to the downside. There's no doubt that it can happen. It's just a question to me of when it does happen, I'll make the adjustment. Until then, I can assure you the easier trade in NQ will be taking it from rotations lower and pushing it back up higher. Okay, so the last thing that I want to leave y'all with tonight, because I don't want to go over and pound things, we're in a bull market. It's bullish. There's nothing bearish going on. We're due for a pullback. That's not the same thing as having an easy short. Okay, so there was a chart. Let's see if this is it today. I shared this with a client. This is the gold market chart right here. And what you will notice, first of all, it looks very easy, but eventually the market got bearish and we broke down over here, finally coming back to 1200. We made this huge run in a straight line, but I want to show you what's most interesting to this chart. First of all, when we got here, notice that we broke down almost all the way down and snapped all the way back and came back and made a new high before rolling over. And given we had quite a dramatic move to the downside here, right? But it wasn't over. Realize this high here, if we look at the data, okay, this high is 1950. Notice we rolled, and it was volatile, but we rolled from 1950 over a period of days. These are big bars. These are 8-hour bars, right? All the way down to 1550, all the way back up to 1850 essentially, all the way down to 1550 again, all the way back up to 1800, all the way back down to 1580, all the way back up to 1800. My point of that is you could have said, oh, the market's bearish and shorted right here, taking an enormous short squeeze, and you could have spent, this time period covers almost 2 years of back and forth movement until it finally got to the point, given you had profits down here, no question, but when you were really calling for, oh, it's going to get crushed from here until the time it actually finally got bone crushed, was almost a full 2 years, a year and a half before that move came, okay? And repeatedly, before we finally got this big down move, with the exception of a few brief periods in here, the easier trades were repeatedly taking locations from lower and pushing them back up almost all day long. It kept pushing back up for over a year, okay? And notice, the other thing that you want to notice is the reason why people try to catch shorts is because they move down so quickly, right? They become very addictive. But if you look, it actually took quite a bit of discipline to short, cover, and then wait for the move all the way back up to the top of the range before you got a short again. And most of these days, the short market looked like this, okay? So it's not just ES, it's not just NQ. All strong bull markets die a hard death, and people are willing to buy on dips lower to push them back up. The last thing that I want to mention tonight is that this game is purely psychological. The market doesn't care about you. It doesn't care about me. It doesn't care about you. It doesn't care about anyone. It's just a market, okay? It doesn't have feelings, emotions. It's not there to serve anyone's particular purpose besides to provide liquidity to companies, right? Everything else we do is just moving money around. That's all we're doing. So really, you're not fighting the market. You're fighting yourself. If you can't handle sitting through days of not doing anything and you have to have a trade, right? And you don't know what your master trade is, the trade that makes you the most amount of money, you're going to have a very hard time succeeding. You're going to spend a lot of time trading for 5 ticks, 6 ticks, 8 ticks, right? But you never get that home run move, okay? You never get the 5, 8, 10-point moves consistently. I can tell you in the last 3 weeks, I've now pulled off since last week, and I've changed my focus a bit. I said I'd be emphasizing it, but I believe today was either the 3rd or 4th. Actually, it's the 4th swing trade I pulled back to the upside for more than 2 points. Well, more in today's case, it was, I believe I had 5.5 or 6 points at the peak. Okay, so I changed my focus a little bit. I changed where I was willing to take the trade, and I wasted less energy trying to fight the market, and I waited for it to come to me. And when it did come to me, even though it was a Fed day, and normally I don't trade a Fed day, I got paid again. That's the 4th time in the row, okay, with very much my focus being I scaled my 2 points, I left my trailers, and then once I got up into my resistance point, I sold. And once again, I exercised my discipline by not shorting at that point. Could have I made some money? Yes. But buyers are in control. The market's trying to break out. As far as tomorrow goes, there wasn't very much holding us back from breaking new highs this afternoon, except for a brief period. I'll get rid of this now. Except for a brief period of profit taking here in ES. And if you'll look at the 24-hour ES, if I can find it, there it is, the 24-hour profile here. A couple of things. First of all, on the downside, tonight and really tomorrow, the first hurdle to get around is going to be this area right here, this 1980 to 82. Okay, so as long as we hold above 80 to 82, I suspect that will keep us in a bullish mode. And my guess is right now we're trading 83.75. There was not a lot holding us back here. It was a pretty weak high, and I believe that tomorrow morning, my guess is by the time we get here, we're going to be gapping above and probably pushing to new highs. Okay, again, I will not be pricing to the downside. I will be looking for trades tomorrow back to the upside, probably down here in this 75 region, and if not 75, certainly the first time into this 70, 72 location. I'll be looking to push trades out of there, and then there is a open gap sitting here that needs to get filled, and I will certainly be all over that if we can push down low enough. My game plan is the same, even though it's boring. We're not in a two-sided market. I want to see evidence that there is a rotation of any sort of measurable size, right, in either ES or NQ before I step in on the short side. I want to know that the rotation is already happening. I don't need to catch the first day. Even if it's a big down day, generally speaking, the second and third days after the first down days are very good. Generally, they're very good to the upside, by the way. Okay, and I think right now, the less I try to push the short side trade, the more opportunities I will have for profits on the long side, and the easier my life will be, and that is the course that I intend to take over the next couple of weeks. You've got to remember, when I trade, I'm trading a very leveraged, concentrated position, and I have a lot of pressure is the wrong word, right? I have a lot of focus on taking the areas that are going to pay me well consistently, because drawdowns really are a beatdown for me, and I don't like taking losing trades. I'd rather wait all day for one or two trades right now. Now, if the market goes, I want to be clear about this. If the market goes back to trading something like what the CL traded today, let's see if I can pull that up one more time for you. CL, here we go. If the market, here, let's get rid of this one. That one's too much crap on it. Let's try to see if the 5 minutes any cleaner. If we get this two-sided market going again here in the in ES, and ES starts looking like this, I will absolutely be more than happy to trade both sides of this. I had a short here today. I had a long. I missed my long here. Actually, I had a short here, and I had a short again right here. Both of those I traded to the downside. I missed my long here, and I missed my long here actually as well. So all that being said, yes, if I get a shot and I can get these two-sided markets going, I will lay on to the short side. But psychologically, I don't want to wear myself out. Emotionally, I don't want to risk my trade capital. I don't want to waste my mental capital, right? And most importantly, I want to help guide the guys who are following me in the live market preview. I want to guide them towards the highest odds of making money, and I want to steer them away from areas that are less than optimal. Okay, so that being said, if anyone would like a trial to the live market preview, please send me an email. It's tradeandperform with an N, TRADEN, perform@gmail.com. I'm happy to extend anyone a 7-day free trial to the room. There's no strings attached. There's no credit cards or anything else. Just an opportunity for you to see how I trade. And number two, and I think importantly, right, if it's not me that you're following and you're trying to learn to trade, find someone who matches both your time frame and has experience and knowledge. I've been in this business for 20 years. Okay, it's not easy to survive. Most people don't survive. There's a huge failure rate in futures trading. And then the last piece is, it's August. Give yourself a break. It's not the greatest market in the world to be trading. It's certainly not a two-way market, right? And be gentle with yourself. Be nice to yourself. Work on your trade journals and work on your emotional journals every day. Anyways, I'm tired. I'm going to, well, I think I'm actually going to go pop a movie in for a little bit, and then I'm going to go to bed. Charts members are posted to the stream, and I will see everyone in the morning at 7:45. So have a great night, guys. Goodbye.